When you talk to people about what they do with the credit, they know that the credit is in part, they get it in part because of their kids. And they know they're getting it for working, and they know they're getting it for their kids. And so I think that's reflected in how they think about spending the credit as well. Like they think that at least some of that should go towards, improving their kids' lives, even if in very small ways. If it's, like I said, like going out to dinner or making sure they can have a birthday party, that kind of thing. So I think, and those things I think are really like, as adults, we might not think too much of them, but I think for kids, that can actually be really like consequential. And you can think about that really doing a lot of good for the family and for the relationship between parents and kids.
I'm JB Wogan from Mathematica, and welcome back to On the Evidence. Our guest for this episode is Katherine Michelmore, an associate professor of public policy at the University of Michigan's Gerald R. Ford School of Public Policy. Much of her research focuses on the Earned Income Tax Credit and the Child Tax Credit and their effect on family well-being. Some of her recent work has looked specifically at the effects of temporary expansions of both credits during the COVID-19 pandemic, which is part of a growing body of evidence informing state and federal policy proposals to make permanent some or all of those changes to the credits. One working paper she co-authored about an expansion to the childless Earned Income Tax Credit was cited in a policy paper from Kamala Harris's presidential campaign. Katherine is this year's winner of the David N. Kershaw Award and Prize, which is awarded to scholars under 40 whose contributions to research-based knowledge have advanced the design, implementation, and evaluation of public policies. David Kershaw, for whom the award is named, was the first president of Mathematica. In the spring of 1979, he helped guide the establishment of the Association for Public Policy Analysis and Management, or APAM, before his death from cancer later that year at the age of 37. The award in his memory was created in 1983 and is jointly administered by Mathematica and APAM. Speaking of APAM, On the Evidence will be at APAM's Fall Research Conference in National Harbor in late November. If you are attending the conference, please send me a message. I'd love to meet some of our listeners in person. I'll include an email address in our show notes where you can reach me. With that, I hope you enjoy my conversation with Katherine Michelmore.
Did you always want to be a public policy researcher, or how did you first become interested in that field in general?
Yeah, it's kind of funny. I don't think I always wanted to, for sure. Certainly not as a child. It was not like I want to be a public policy researcher when I grow up. I think when I got to college, I actually I kind of stumbled into an econ class. Like I had taken AP economics in high school, but it wasn't a natural thing that I didn't think I was going to go into economics. But it was like one of those silly things. Like a lot of my friends were taking Econ 101, and I was like, oh, I did really well in econ in high school. So, why don't I try this out? And I actually just really enjoyed it. And I think a lot of people, I had some really great mentors. So one of my undergrad mentor, Joyce Jacobson, was very influential, I think, in helping me kind of navigate into the field of, I think initially I wanted to get a PhD in economics, and then, I just kind of veered a little bit of a tangent onto public policy after college. I worked at the Urban Institute, and that kind of, I think, really motivated me to want to do more like work that was relevant to, the greater good. So I think that's kind of how I got started. I think, and I went to a liberal arts college, and initially I actually really wanted to go back and teach and be at a liberal arts college. But again, a couple little side steps here and there put me more towards the research path. I mean, I love teaching too, but I think that's kind of my circuitous path here.
Was Joyce Jacobson interested in public policy herself? What was her area of focus?
She actually did work on gender and economics. So I remember taking a gender and economics class with her early on in undergrad. And it's just really eye-opening, I think, because, taking economics and intro to economics in high school and early in college, you just think of kind of basic supply and demand curves. But it was like taking some of those more elective classes where it was just giving me a sense of how expansive economics could be. And so it was just like really interesting to think about all these other issues that I hadn't really considered being like part of economics or part of public policy, that got me interested in that.
Were your parents academics in their own right? What did your parents do? Anything related to
No,
what you do now?
no, actually, like very much not related at all. In fact, I think they still like don't quite understand what I do every day, and sometimes like they'll like they know that I have to publish, but like they'll often ask like, "Oh, you get your summers off?" And I was like, "Yeah, I know, I get them off, but it's really a time to get research done." No, my dad was an accountant, so we'll kind of come back into that later, I think. And my mom didn't go to college. I'm actually the first in my family on her side to go to college. So she was more of a kind of pull yourself up by your bootstraps kind of person. She married my dad when she was 22 and then like took community college classes and ended up working for the federal government. She worked for what became Department of Homeland Security. So she spent her whole career kind of working in like administrative roles for the government. But yeah, academics are not in my family. I think I'm the first in my family to be in academia. So it was definitely not a path that I kind of was familiar with before kind of embarking on it myself.
That's really interesting. So you mentioned your father's an accountant. Maybe this is where we're going to go with this, but a lot of people know you because of your research on tax credits and the earned income tax credit and the child tax credit. I was curious how you settled in on focusing on those topics. I mean, I really like them. I really loved to cover them as a journalist. They seem because they had bipartisan support. There was some evidence of effectiveness, but they seem a little bit more like hipster or niche to me as a policy topic. So what attracted you to these credits?
Yeah, that was kind of another maybe serendipitous thing. My dad growing up used to always say, like, don't become an accountant. So it was not at the forefront of my mind that I was going to do anything related to taxes. But I like to say that it's in my genes a little bit. But yeah, it's kind of funny how I got started. So after college, I lived in DC and I was working as a research assistant at the Urban Institute. And a lot of my colleagues there used to volunteer to do free tax preparation for the IRS VITA sites. So they provide free tax preparation services to low income residents in the DC, Maryland, Virginia area. And it just sounded like an interesting volunteering opportunity for me. So I went through the training, and there's a test you have to take that is actually quite challenging
Hmm.
to certify to be able to do free tax prep. I mean, you want it to be probably challenging so that the people who are doing your taxes are qualified to do it. It's nothing like passing a certified, like the CPA exam, I'm sure that accountants have to take, professional accountants have to take. But it was definitely something that I had to like spend a lot of time passing that exam. And then I used to just spend my Saturday mornings during tax season doing free tax preparation at a community center in DC. And again, it wasn't something that I had kind of gone into like knowing I wanted to study taxes, but it was just purely a volunteering opportunity. And I actually just really loved it. I said it was like the perfect volunteering opportunity for me because I really liked the numbers aspect of it. I liked kind of just calculating people's taxes in a very nerdy way. I just thought it was really fun and satisfying to see like how much we were getting for their refunds. But it also really was paired with like being able to hear people's stories. So I used just to hear people, people will tell you a lot when you're sitting with them for an hour doing their taxes. You hear a lot about their life stories. And it was just really interesting to me to hear people talk about how much of a difference the taxes made, the refunds made for their lives. And, there were always scenarios where, I could tell people really counted on getting a certain amount every year because anytime we got to the end result and it was more or less than they expected, especially if it was less, like people were really stressed out about it. And like, so I could just really see how important it was for people's lives. And so that really, I think, sparked my interest in studying the EITC in particular. I'll say like one of my, and I've continued to volunteer whenever I can for these services. I did it throughout grad school, and the last couple of years I haven't been able to do it, but it's been really fun. But my favorite story is, I did someone's taxes once. She was self-employed, and her sole source of income was from selling 22 golden doodle puppies.
Oh
And
my
it was
gosh.
just and just enumerating all of the random expenses one incurs from being like a dog breeder. It was just like a really fun experience. So that was really how I started down this path.
Okay. And just for listeners, just in case, EITC, I'll just name that is the earned income tax credit. So anytime we say, I don't know if people say CTC as well, but that would be the child tax
That's right.
credit.
Yes,
Um,
yes, CTC is definitely in there as well. So thank
okay,
you.
all right, it's a common acronym as well.
Yeah.
So I know when like I like using IMDb, I'll look up an actor and they'll have a feature where you can see what they're known for. I kind of wanted to draw an analogy. If there was an IMDb for like public policy research, what would be the main papers and main findings that people should know you for? Like what have you found through your research on the earned income tax credit and the child tax credit that people should associate with your scholarship?
Yeah, I like that IMDb page for public policy. That's great. So I think so I started with the EITC. I think that was the bigger program, and that's the program that's been more targeted towards low income families in particular. And so when I started studying it in graduate school, at the time, what we really knew, the thing we knew most about it was how it impacted employment among single mothers. And so there was a pretty big growing literature showing that the expansion of the EITC, particularly in the early 1990s, led to a pretty large increase in employment among single mothers. But we didn't know a lot of other impacts of the EITC at that time. And so I was really interested in the impacts on the second generation. So what's the impact of the EITC on the children of people who are getting it? So that is where I started my focus. And so, there was a little bit of work done on sort of contemporaneous effects of the EITC on kids' outcomes like test scores and a little bit on health. But what I was also really interested in was the fact that, these kids often get the EITC for a long portion of their childhood. So the nice thing about the EITC, like unlike some of our other programs like the cash welfare program now, there's not a time limit where you can only claim it for a certain number of years. So as long as families continue to meet the income criteria and have children in the household, they can claim the EITC for as many years as they want. And so I think I've seen numbers recently suggesting that about half of kids will receive the EITC at some point in their childhood. So I was also interested in this dynamic piece of it, of how long are kids receiving the EITC and how does their childhood exposure to the EITC affect their later life outcomes. So I have a number of papers that use that kind of identification, so to speak, of like looking at how cumulative exposure to the EITC in childhood is associated with outcomes in adulthood, and trying to put a causal lens on that by taking advantage of a lot of federal and state expansions to the EITC over time that kind of generate this nice quote unquote random variation in how much EITC benefits kids are exposed to. So, a kid born in 1990 in, let's say, like New York State is exposed to a different set of EITC benefits over their lifetime than a kid born even in the same state like 5 years earlier. So kind of leveraging all that variation, I've done a lot of work to look at kind of kids' longer run outcomes. So one paper I think I'm very well known for is a paper that looks at educational attainment. So looking at how kids who are exposed to larger EITC benefits in childhood are more likely to complete high school and complete college and have higher earnings in adulthood. And that kind of spawned off in a couple other sets of outcomes. I have a related paper that looks at teen fertility and family formation that also shows that kids who, like, not surprisingly, if kids are, more likely to have more education, we also see declines in things like teen fertility and evidence, particularly that young women are postponing family formation, probably because of these education outcomes. So that's kind of a set of papers that I have looking at those things. I think beyond that, then I started thinking about kind of the consequences of having work requirements in programs. So this is something that's increasingly talked about in public policy is should our social policies be contingent on people working? And the EITC, that's baked into the structure of the program. You have to have earnings to get it. And so I started thinking about who are the people who are responding to these work incentives and what are some potential consequences of having more. So for instance, having your mom go to work, what are the potential consequences of that? So I have some work that looks at kind of what types of single mothers are most responsive to the credit. And it turns out it's actually mothers with very young children. So mothers with kids under 5 are actually the most likely to enter the labor force when the EITC becomes more generous. And so I think that leaves like a very big question of like, well, what is happening to those children when the moms are going to work? So I have some work that looks at kind of the implications for childcare arrangements. Finding that, it's kind of a mixed bag, I would say, that you see that kids are more likely to be taken care of by someone other than their parent when moms go into the labor force, which is probably not surprising. And it's kind of evenly split between going into more like formal childcare arrangements, which tend to be of higher quality than other types of arrangements, but also a good chunk of those kids are being cared for by a relative where there's just uncertainty, I think, about the relative quality of that. So that's kind of another bucket of things. And then I'll just kind of finally, another strand, I think, is really focusing on the household finance implications of the EITC. So is the EITC kind of helping families build wealth and accumulate savings and reduce debt? So I've done some work looking at families kind of using the EITC to pay down debt, and it does seem like it's leading to increases in wealth, which I think have, again, point to kind of improvements in the long run. So that's kind of a snippet of some of my EITC research.
Okay, and I'm sure that's only the tip of the iceberg, but I appreciate that kind of potted summary there. I wanted to ask, so the first of those three buckets that you were describing, I think people probably initially think of the earned income tax credit as a kind of pro-work policy that's really aimed at trying to incentivize work and lift an anti-poverty measure for the workers. But you were interested, you thought of these other implications for the other members of the household and what it might mean for the kids of these parents who are incentivized to work. Was there some insight that you had from working with the low-income tax filers back in the day that made you think about what the implications were for other members of the household? Or how did that thought occur to you that there are other interesting research questions beyond just what's happening to the worker themselves?
Yeah, I think a bit from that, I'd certainly hear stories from people, and there's been a lot of like excellent qualitative work done asking EITC recipients like how they spend their credit. And you hear a lot of these stories about people wanting to do things for their kids, even if they're very small things like taking their kids out to dinner or, going on a road trip family vacation, even if it's for a short period of time or not very far away, that you hear. I think people, again, when you talk to people about what they do with the credit, they know that the credit is they get it in part because of their kids, and they know they're getting it for working, and they know they're getting it for their kids. And so, I think that's reflected in how they think about spending the credit as well. Like they think that at least some of that should go towards, improving their kids' lives, even if in very small ways. If it's, like I said, like going out to dinner or making sure they can have a birthday party, that kind of thing. So I think, and those things I think are really like, as adults, we might not think too much of them, but I think for kids, that can actually be really like consequential. And, you can think about that really doing a lot of good for the family and for the relationship between parents and kids. But there's a much nerdier reason why I got down this path too. Is when I first started wanting to look at education outcomes for kids, I was actually really first interested in this like quirk. It's not really this provision in the tax code, which says that to claim the EITC, if you have to claim a child for the EITC, they either have to be under the age of 19, or if they're between the ages of 19 and 23 and they're full-time students, you can claim them. So I was really interested in like essentially seeing, I was broadly interested in trying to see whether families are kind of taking note of this, and like whether that incentive, if your kid's in school, you get to claim this extra, larger benefit. If that was creating an incentive for kids to stay in college, that was like the initial goal, and it just became too tricky to try to identify that. I've seen others try to tackle this question too, and it gets a little tricky. But that's really actually where it started, was like just learning more about the credit and realizing there was this kind of interesting quirk of the requirements that you could get this benefit if you were in college, but not otherwise. So I was interested in whether it was actually encouraging people to go to college, and then it just kind of expanded from there to think about, well, there's, other than this like one-time credit when you're 19 to 23, your whole childhood you're getting more money from this credit. So how is that impacting kids' outcomes?
Can I ask a silly question about the design of the EITC? Is it only for parents with dependents in the household, or can you receive it if you don't have kids as well?
So there's a very small credit for people who don't have kids. It's often colloquially referred to as the childless EITC. But just to put things in perspective, the maximum credit that you can get if you don't have a kid right now is about $500. Whereas if you have multiple kids in the household, you can claim over $7,000 of federal EITC benefits. So it's just an order of magnitude smaller. There has been a lot of motivation to try to increase the benefit for childless filers. So in 2021, there was a temporary expansion that tripled the size of it to $1,500, but that expired along with some of those other American Rescue Plan Act reform. So that one it's unfortunately been a very small credit, and it's only applicable to people with very, very low income. So it's not technically just for people with kids, but in practice, it's mostly people with kids who get it.
Okay. All right. So I want to ask about data sources, because I noticed that one of your recent papers used data from an app called Propel, which I had not heard of before. I was hoping you could explain what Propel is, how you worked with the company to collect data on the child tax credit for that research, and how those data are different from what you might get from current surveys conducted by federal agencies.
Yeah, so Propel is this company that makes this app. The app name has changed over time, but I think it is now called Propel. And they make an app for food stamp users. And so this is going to maybe sound crazy, but before this app existed, for food stamp users to find out how much money they had left on their food stamp account, they'd have to call like an 800 number, or I think at the grocery store you might be able to find this out. But there was no way for them to track in real time like how much benefits they have. So this app kind of works like your bank account app on your phone. Basically, is like they just kind of log into their account and they can see in real time like how much money they have on their food stamps, and they can there's other things they do on the app. They can get coupons and other things like that. But the company also conveniently does a monthly survey to a subset of their users. And I should say, I think something like 25% of food stamp users use this app. It's a pretty large percentage of users. And I think people find out about it often through like caseworkers or word of mouth, but a large share of food stamp users actually use this app to track their benefits. And so my colleague, Natasha Pilkauskas, she had been working with them on an unrelated project. So she had already had kind of a contact there. And when the change to the child tax credit was announced in 2021, we naturally thought, oh, this might be a way for us the Propel might be a way for us to get some real time evidence on how the CTC is impacting families. So they were already administering this survey. It was kind of like it's named something very similar to the census pulse. It's like the household pulse survey or something like that. And they were asking questions that were what we might think of as like we characterize as material hardship questions, things about like, does the family experience food insecurity? Are they having trouble paying their bills? Are they unable to go to a doctor because they can't afford it? Those types of questions. And they just asked a number of different like mental health questions as well, and a broad number of economic questions about their monthly income, the various debts that they were holding, and some household or living arrangements. And this was administered every month. So once this policy was announced, and Propel was really interested in supporting us and giving us data so that we could answer some questions we were interested in. And they actually also, the nice thing about working with them is it was very easy for us to change some of the survey questions. So prior to and we needed to do this pretty quickly because, the policy is announced in March and was going to be implemented in July. So we needed a couple months of pre-period data to be able to analyze the impact of the program. So they let us make some changes to the survey, just add a couple questions. Importantly, they ask questions about whether the families like receive the child tax credit each month, and if they didn't receive it, why they didn't receive it. And they ask them questions like how they spent it and so on and so forth. So it was just really nice to work with them because, they were administering the survey in real time. We could get the data like immediately after the survey closed. We could add these extra questions we were interested in. So it really gave us a much richer portrait of what was happening on the ground with these families than is typically available in other surveys. So, the only other survey that was done, at the national level that was done was the Census Pulse data that was also trying to get this kind of real-time information. But I would argue that we had a lot more measures of material hardship that were really helpful for us to gain some insights into how families were spending the credit. Now, of course, I think the question that gets raised is, who's in this data set? How can we, I think these federal surveys are obviously very well vetted, and there's a lot of thought that goes into representativeness and sampling. Whereas, a company like Propel is, they're doing what they can there too. I don't want to downplay the work that they're doing, but it's just a very different beast. And so in all of the papers we've done on this, we've done our best to try to look at the characteristics of the people in our Propel data and see how well they match to characteristics of people in national surveys like the American Community Survey, their current population survey. And what we've broadly shown is the sample of people from Propel, they're food stamp users largely, and they largely look like people who are reporting that they get food stamps or people who are reporting that they're living in poverty in these other national data sets. So that sort of gave us some reassurance that our survey, largely looks like a population of people, of poor people that we would get from a broader survey. So that gives us a little bit more confidence in the quality of the data.
That's great that they were so enthusiastic about a research partnership. Were they doing the survey for research, or why were they already doing a kind of pulse survey like that? That sounds like an amazing foundation to work from.
Yeah, I mean, they release reports every month. I mean, I think their goal was to try to get a sense of, how well these families were faring, and so they were doing quite a bit to kind of release reports. But I think they've been working hard. I think they just hired like a year or so ago a more comprehensive like research team. But at the time, I think that they were administering the survey and just doing some basic. They were putting out some basic statistics, but they didn't really have, I think, at the time, like the capacity to be doing like larger scale research studies. And so I think they were really happy to partner with us because I think they felt that they didn't have the in-house capacity to do that kind of work, but they were very interested in seeing the impacts of the CTC.
That's interesting. So your research on tax credits has garnered a lot of attention from reporters and policymakers. I'm always interested in the communications aspect of policy research. And so I wanted to ask how you've tried to prepare for engaging with those audiences, with those lay non-research audiences. And do you have any helpful advice for translating findings for non-research audiences?
Yeah, I mean, this can be a tricky one. A couple of years ago, I remember, when the CTC was being rolled out, and there was this concern about work requirements and how parents were going to drop out of the labor force because of the CTC. There was this whole question that was going around about, well, what are people's labor supply elasticities? And trying to explain like a labor supply elasticity to a lay audience was quite challenging. And I actually commend a lot of the journalists that I have spoken with for being able to simply convey those ideas to a broader audience. So all that to say, it's definitely very different than an academic audience. I think in academic settings, we're really used to, putting it all out on the table and like really rigorously defending our research methods and kind of convincing you that we've looked at all these different robustness checks and, we kick the tires and everything is very solid. And, that's not something I think that journalists are as interested in is that whether your results are robust to a million different robustness checks. So for me, I had to remind myself that, you have to distill this down to like, what is the big picture point of what you're finding? And I think I've been really lucky to work with a lot of colleagues and mentors over the years that really prioritize writing simply and clearly and not, overly including a lot of jargon in writing. And so that's always been my philosophy too, is just trying to write things, even in my academic papers, as simply as straightforwardly as possible. It's not my goal to show you, how smart I am with all the jargon I can put in my paper. So I think that's helpful is keeping in mind that, conveying your ideas simply is good for disseminating research. But I also keep in mind when talking to journalists, and again, it can be really nerve-wracking when you first start doing it, because I think we're always, I at least kind of came, like when I started talking to journalists, would be really concerned that I'm going to say the wrong thing or that they're going to catch me in some like inconsistency and, that my reputation is going to be ruined or something. But, most of my experience, almost all of my experience with journalists has been coming from a good place, that journalists really just want to get the right answer and they want to make sure that they understand your findings. And so I've always had really good luck with speaking with journalists who come from a good place like that. So I keep that in mind when speaking with the media, is that, the point is to try to make sure that the people you're speaking with understand your results. And again, like trying to keep things at a higher level than just trying to convince people that you've done all these different checks to make sure that your results are sound. I mean, that's obviously very important, but I think the big picture takeaways are also important to keep in mind when speaking to a broader audience like that.
Now, most of what you were talking about, I think you're talking about from interacting with the media, but what about, say, congressional staffers or other policymakers, people in government who are looking to take lessons from the evidence and make policy decisions based on it? Have those experiences been, is it the same advice, just be as simple as possible, or are there other things that you've had to do to explain your research to that audience?
Yeah, it's a good question. I think it's a similar message of trying to be very clear and take the big picture points away from it. I think it does feel more nerve wracking though, because it feels very consequential that like they're talking to you and it feels like what you say is something that they might take. I mean, I don't know that they'll actually use it, but I think that can be a little bit more nerve wracking. So that's where I really try to make sure that, all caveats are understood and, saying a lot of, well, this is what we know so far, but we don't know the X, Y, and Z. So there's a lot of that. That happens. But again, I do think a lot of it is, at the end of the day, they just want kind of like, what is the big picture takeaway from your findings? So I think in many ways it's similar to speaking with the media, but in my view, it's a little bit more intimidating because it feels a little bit more consequential potentially.
Yeah, yeah. Some live ammunition. The journalist isn't going to be able to change the EITC, but maybe the right member of Congress could
Yeah, I'm
influence that.
increasingly pessimistic about that too, but but yes, I think that's right.
So on a related point, I mean, talking about policymakers, both, this episode is going to air shortly after the presidential election. But both campaigns, Trump and Harris campaigns, have talked about expanding the child tax credit. So I was just curious, what is it like to be an expert on something, a somewhat niche topic that is suddenly a talking point by presidential and vice presidential candidates and in their campaign literature and some speeches?
Yeah, it's really surreal. I mean, it's not like I'm in direct contact with anybody from those campaigns, but I was a couple of weeks ago pleasantly surprised to see some of my work was cited in Harris's proposal, and that was the only research she cited was like one paper that I'm working on with a couple of colleagues, and so it is really like kind of surreal. But I'd say more broadly, you can't ever really predict what's going to happen in the policy landscape. So it's not. I mean, it's not something I ever like encourage people to like try to chase the next big thing. I think I've always just followed by the guidance of researching something I'm passionate about, and I think that's what sustains me. But it is, of course, nice to see that your work is something that's being discussed in the real world, because that doesn't always happen. And I think, especially in a lot of academic settings, you might feel like you're just talking in an echo chamber and nobody is actually paying attention to anything that you're writing. So it is really nice to see your work being recognized. So, and that's, I think more broadly what I really was, you asked me about public policy, how I got into this. And I think that's something I actually really enjoy about being in public policy more broadly, is that you do have a greater chance of studying a topic that might actually be, implemented or reforms made to. So I think it's really fun to be to be a part of those conversations, and I feel lucky to be part of those conversations. Of course, I think a lot of times, even when it's being discussed in the real world, you can still talk about your recommendations and things like that, and nothing ever happens. But it is nice at least to hear that people are talking about the issue. So it's a really gratifying feeling.
So the last question to wrap up, I just wanted to ask about the future. And, many times research leads to more research. And I was curious if there are any unanswered questions or new questions that have cropped up as you've been studying the earned income tax credit and the child tax credit, anything that you hope to pursue in the future?
Yeah, it's a great question. So I think on the child tax credit front, I think prior to the 2021 expansion, there really wasn't a whole lot of work done on it. So it was nice, I think, because of that expansion gave us a nice opportunity to study the impact of the credit. But I think there's still actually a lot we don't know, even though it was a temporary credit. I think first and foremost, going back to kind of my early start in the EITC, is that we don't actually have direct evidence on how it impacted children, other than things like food insecurity. And there's some preliminary evidence on impacts on infant birth weight. But, there's a whole host of outcomes we could study for kids directly that we just don't have evidence on, I think mostly because of lack of data. So I hope to see people kind of explicitly looking at how the CTC in 2021 in particular impacted kids. And I think what was nice about that, this kind of ties to some other research conundrums in the EITC, is that I think one thing I've learned about the EITC I keep coming back to is, it's really hard to know what it is about the EITC that is leading to the outcomes that we see, the improvements in kids' outcomes. And in particular, I think, in the early research on this, I think we're drawn to trying to point this towards increased income, that it's about like giving kids more money is what leads to better outcomes. I think there's a lot of reason to think that that's true. But the program isn't just about giving families income. It's also like encouraging their parents to go to work. And so I think that like something that's always frustrated me is that it's just really difficult to be able to disentangle like how much of the effects that we see are coming from, the repercussions of parents going to work versus the income itself. So I think that's just something that's been like really tricky. I mean, that's a very like maybe a specific topic, but I think it's something that has really broad implications because, like I mentioned earlier, we're talking about work requirements and a whole host of other programs. And one of the primary reasons why the CTC the expansion wasn't extended in 2021 was because of this concern about whether it should have work requirements. So I think we really do need to understand fundamentally, like how much of the benefits we see from these tax credits is about getting more income and how much of it is about labor supply effects. So that has been at the top of my list. I don't know how exactly, I think other researchers have tried to get at this a little bit, but I think that's a really fundamental question moving forward. I think the nice thing about the CTC in 2021 was it wasn't tied to work. So that's, I think, again, a nice place to see what the effects were directly on kids, because that would give us a better sense of like, if we gave kids more money, like what happens to them. So I think that's a big piece, that those are kind of two intertwined topics. And then another thing that has always been on my mind is I'm really interested in this piece, going back to, prepping taxes for people is, people get these tax refunds are huge. They get these payments that could be worth up to like almost half of their annual income in one lump sum when they file their taxes. And, thinking about how families spend that kind of money, like that they get all at once, versus if they were to get that money over time, like as a monthly payment, I think is really important to understand. So I think something that's been nice about the 2021 expansion to the CTC was that half of the credit was distributed in monthly increments. So families received monthly benefits between July and December of 2021, and then they got the rest of it as a lump sum when they filed their taxes in 2022. So that gave a nice environment. And I've seen a couple papers try to make something of this, of kind of differentiating how families spent the monthly benefit versus the lump sum. And it's been, this is novel. There's lots of, I think, researchers have thought about this and what are the trade-offs of offering benefits on, a more regular interval, say monthly versus annually. And other countries structure their benefits differently too. Most other countries, I think, do distribute benefits a little more frequently. So I think just like having a better understanding of the implications of those. And I don't think the answer is very straightforward because, again, when you talk to people, in qualitative work, when you talk to people, they really like getting lump sum benefits because it's a forced savings mechanism. It allows families to make like pretty big purchases that they wouldn't necessarily be able to make if they were just getting smaller payments throughout the year. But on the other hand, we know that these families are also really credit constrained and, they might be taking on debt every month to make ends meet, that they might be benefiting from, getting a more regular payment that helps them pay their bills, helps them keep food on the table. So that's always been something I've dabbled a little bit with in my previous research, but I think would be interested in learning a little bit more about kind of the trade-offs of offering benefits on a lump sum annual basis versus a monthly basis.
Katherine, thank you for answering all of my questions and follow-up questions there. Really appreciate talking with you today. And by the way, congratulations on winning the Kershaw Award. That's prestigious and well-deserved recognition of your scholarship so far.
Oh, well, thank you so much. It really was a pleasure to be here, and I'm happy to chat. So thank you again.
Thanks again to our guest, Katherine Michelmore. In the show notes, I'll include links to the papers she discussed on this episode. Longtime listeners may remember our past interviews with the last 4 winners of the Kershaw Award: Elizabeth Linos, Abigail Aiken, Sonia Carley, and Karabo Jackson. I've created a Kershaw Award playlist on Spotify so you can hear those earlier interviews if you're interested. This episode was produced by my Mathematica colleague, Rich Clement. If you liked this episode, please consider leaving us a rating and review wherever you listen to podcasts. To catch future episodes of the show, subscribe at mathematica.org/ontheevidence.